So even though I've only been investing $25 to $30 every single week for the past 5 years, I have been able to grow a dividend portfolio that pays me $356 per year, at least at this point. And in this video, I want to go over the 5 dividend stocks that pay the most in my entire portfolio, including how much I make for them and why I'm actually considering selling one of them. But let me know in the comments below, what are your top 5 paying positions in your portfolio? It's very possible we're going to share some of the same ones. So my 5th biggest dividend payer is Main Street Capital. I have a little over 5 shares and right now I'm getting paid $16.98 per year. And spoiler alert, it's the only position on this list that's actually making me money so far at a little over $72. Main Street Capital is a BDC or a business development company located in Houston, Texas. And the main scope of this company is to invest in lower middle market companies by giving them debt or equity loans so those companies can use that money and do whatever it is that company does. For example, their most recent investment is in a talent advisory company called ZRG, and they actually gave them a financing loan of $120 million, which allows ZRG to have a healthier balance sheet and gives them more financial flexibility to continue their services. Services like this allow Main Street Capital to make their returns through the interest of these loans, and that allows this company to not only maintain a high dividend yield, but also pay their shareholders every single month. I'm planning on holding the few shares of Main Street Capital that I have, especially for one because of their 5.92% dividend yield. Also, every quarter since September of last year, they paid a special dividend which is typically higher than the regular monthly dividend that they pay. That's why they show only having 3 years of consistent dividend increases even though they have 12 years of consistent payouts. One concern I do have with Main Street is the competition they may face when it comes to interest rates, especially with the impact that COVID has on how expensive it may be to borrow money from banks and stuff like that. But that's just something that I'm gonna have to wait and see what happens next and dig more into. But in the meantime, I am gonna take advantage of their high yield and their consistent payouts, especially with that special dividend. At number 4 is Target, a grocery store that I'm sure a lot of us have shopped at. Probably not necessarily for the groceries because their prices are a bit more on the expensive side, especially in comparison to a company like Walmart or Kroger, but it's more the experience that you may get. I mean, even down to the shopping carts where it seems like all the time, none of them are ever broken. It's crazy. I currently have 4.59 shares of Target that pay me $20.54 per year in passive income. And unfortunately, Target is my biggest loser, and that could go back to a few things, including how inflation is affecting their sales and how it's also been reducing the amount of foot traffic that they have. On a positive front, Target is currently trying to work on reversing the effects of inflation by reducing the prices of their groceries. And they're adding AI to their stores with something called Store Companion, which will basically help team members with daily tasks to basically make their jobs easier to the point where they can spend more time with customers. That should hopefully increase overall customer satisfaction, which will hopefully increase foot traffic, which will hopefully increase revenue. I'll probably keep investing into Target for the long run, especially for their dividend history. They have consistently paid and increased their quarterly dividend every year for the past 55 years. So for somebody that is a long-term holder or a long-term investor, that builds a lot of comfort. At number 3 is Realty Income, which is probably my favorite monthly dividend stock, and at this point it pays me $26.09 per year in dividends with the 8 shares I currently have. Unfortunately, I'm losing about $50 in this position, more than likely because of how interest rates are affecting most businesses. And since Realty Income provides long-term leases for tenants such as Dollar Tree, Sam's Club, and Lowe's, it's going to directly affect them as well. But this is definitely another position that I am holding on to for the long term because of their dividend history. They've consistently paid a monthly dividend for the past 30 years and have consistently increased their dividend for the past 26 years. Plus, eventually interest rates are going to have to recover, and I see Realty Income stock recovering as well and hopefully being in a long positive trajectory in the long term. QILD is an ETF I intentionally invest in knowing that I'm sacrificing long-term profit for dividends that have been fairly consistent and easy to get with a fairly cheap stock. And that's really important for me, especially being someone that only invests $30 every single week. Ironically enough, QILD has been on a growth streak for the past month, definitely because of how the tech sector has been doing, led by companies like Nvidia. With this ETF, I am losing about $28, but I am currently making about $28 per year in dividends, so it almost evens out, at least just for this year. As far as as the dividend details go, it currently has a trailing 12-month dividend yield of almost 12%, which may be the highest yield out of every position I have. However, it has a 0-year dividend growth since its payout tends to range from 16 to 18 cents per month based on its cover call strategy option, but they have been consistently paying dividends every month for the past 9 years. This is an occasional play that I make whenever I want to take my $30 and be a little greedy towards the passive income that I'm making. And even though when you look at its stats and it shows that stock price tends to go down, with that dividend reinvestment, there is a good chance that I will see actual positive returns over the long term. My highest dividend paying position in my portfolio is Delta Logistics, which pays me over $30 per year with the 7 shares that I have in the stock. Fun fact, investing more into Delta Logistics was actually part of a challenge that I made for myself after confirming that Delta Logistics was the most balanced position that I had when it came to its dividend history and its share price history. And I wanted to see how it affected my portfolio. So that idea led me to this challenge, which required me to invest $30 per week only into that company for 8 straight weeks. And after those 8 weeks, it became a company I eventually started to lose money from. On the dividend side, they do have 9 years of consistently paying and increasing their quarterly payouts, which is great. And they currently have almost an 11% dividend yield, which is the product of a 5.68% growth rate over the past 5 years. But despite the fact that I went all in on this company for 8 weeks straight, and it pays me more than any company I have in my portfolio in dividends every single year, this is a stock that I'm putting on the hot seat from this point on. They manage assets in the oil and gas fields such as pipelines, tanks, and trucks, and seeing regulatory changes along with the market volatility within this industry is probably why the company's share price isn't doing too great. And when it comes to the dividend payout, they have a payout ratio of 151%, which I haven't dug into deep with the analytics to figure out why that is, but I can't imagine that a company can maintain their payouts when their payout ratio is so high. That makes Delta Logistics a position for me that I'm probably not going to invest into for the time being until I see some positive changes, but it is a position I'm probably going to hold so I can take a little bit more advantage of their payouts unless something drastic happens and I may be forced to sell. At this very moment, all 5 of those positions pay me $92 per year, which in comparison to how much I make overall is about 25% of that payout. And that's only off investing $30 per week, which shows the power of compounding interest despite how much you may be putting into your portfolio. Along with that compounding interest mindset, I do give some more cool tips about how to invest with a low income budget in this video, including the mental challenges that people may face when they're investing with an amount of money they feel like isn't enough. So make sure you check out that video. Hopefully you guys enjoyed this video as well. I appreciate you guys watching, and until next time, as always, take care.